We achieved something today that we have not achieved since for over a year, for over about 16 months or so, and that is a 5-day losing streak. Yes, we have had a 5-day losing streak on the S&P, down almost about 1.5%. I'm going to compare this 5-day losing streak to others, so we can kind of gauge just how bearish it is, because it can, like the April 24th was a intermediate decline. So does that mean now that because we're down 5 days in a row that this will be an intermediate decline? So we're going to break that down like we always do every day. And we're going to gauge, along with the market forecast indicator, other indicators that would suggest whether or not we're going to come off of this low point. It's been 5 days and we've been talking about a bounce for the last couple of days. Are we finally going to get that tomorrow or early next week? Or are we going to break through to the downside? Are we really set up for a catalyst to throw us for a loop here? So we're going to look at the different indicators and the patterns they're showing us. And like I said, compared to some of these other times that we've had that kind of weakness. We'll also take a look at, that three-headed monster that really reared its ugly head again today. And why, like, how did that put pressure on us, and why do we want to avoid that, and how does that look, how do those three things look going forward? So I'll break down again what that three-headed monster is, and why they're important, and what to watch for going forward. And then our trade idea is in one of the sectors that has been outperforming the market here lately. Not necessarily one that we want to outperform, but it's been a stock that after a strong rally has been consolidating. So we'll talk about how to trade that. So let's go ahead and get started. Today is Thursday, August 21st, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Let's start off with the S&P 500 with the market forecast indicator like we always do. And you can see, again, another down day. So 5 down days in a row. In fact, when you look at them here, again, they don't look so bad, right? It doesn't look like. And when you look at it, so the last time we had a 5-day streak in a row to the downside was right here, April 2024. We had a 6-day streak to the downside. So that was the last time. So way over here in the 2-year chart, right here. And we also had, you can see a couple stretches there in 2023, but 2024, the last time we had 5 days in a row. But if you were to look at the 5-day return that we just barely have experienced now, so we're down, just under 1.5% over the last 5 days. That's not even close to the biggest 5-day. I mean, we just had a 5-day loss, and starting with August, like the drop, the 5-day return ending on August 1st was a 2.5% decline. The 5-day return ending on May 23rd was a 2.5% decline, and all of these others going all the way back again, finally until we reach there's August of 2024 until we reach April of 2024, and the 5-day decline we had there, the first 5 days of that drop. Ending on April the 18th, it was a 3.5% decline, so more than double. So this current 5-day decline just really has not been that big of a problem, other than getting a lot of people all nervous and hung up on what's going on. The reality is it just hasn't been that big of a drop, similar to what we saw over here, where we had 4 out of 5 days to the downside and pushed short-term sentiment lower, but not significantly lower. Both the near-term line and momentum line are still in bearish territory, so neither one of them have crossed above 40 yet. The intermediate line showing weak bullish posture, or weak posture, so we haven't crossed the 30-day moving. We have the light pink shading because of that. We don't have the yellow line yet because we're still above the moving average by 0.25% down there. Looking at the NASDAQ 100, remember, it did give us a bull tag, and we stayed in the range of that bull tag, so we haven't built on that low. Short-term sentiment rebounded a little bit, but still in bearish territory. The intermediate line now is out of bullish territory, with this bull tag. And again, we'll see. Last time, some of these other bull tags, it did get out of bullish territory and then rebounded right back up to the upside, and we maintained the trend. Let's take a look at the Dow Jones Industrial Average. And you can see again, a similar decline, not very strong. We're still above moving averages by, 0.2%. The intermediate line is actually still above the 80th percentile, hence still we have the dark green shading, and we're also still above a rising moving average, so we have the green line there. The short-term sentiment also stalling, like it's in bearish territory, but a lot higher levels than what we see on the S&P and the NASDAQ. So still, we're setting up for a bounce to occur here. The Russell 2000 actually did bounce today by almost 0.25%. Its near-term line crossed above 40, but just barely. The momentum line was above it, but just barely. So it looks like, again, that we're set up for, just like we have been the last couple of days, for the market to bounce back up. And we'll see if that ends up being the case here tomorrow going into the end of the week, right? So nice, good pattern. Again, if this is what a bearish near-term decline looks like, and we're struggling with bearish sentiment, then we'll take this, right? This is great this is a great bearish near-term decline, because it's setting ourselves up for a continuation of this bullish intermediate rally we've been on since the April lows. Continuation of dark green shading again, because it doesn't take much. All the intermediate lines just got to turn back up here. Same thing with even the NASDAQ. The NASDAQ's intermediate line's below 60, but again, if it turns back up here pretty quickly with a strong near-term rally and a bullish crossover of the near-term line above the intermediate line, then we're right back at it. And especially with the bull tag that it has already shown. So again, nothing like this is the bearishness that we've had, and it's not really been that bearish. If I look at the QQQs, the 5-day decline that we've had on the Qs, same 5-day loss. Again, remember, this is a higher beta, so a little bit bigger of a decline, but less than 3%. But again, nowhere close to what we've seen. We've had lots of other 5-day windows of 3% declines or more since last April 24th, or last April of 2024. So that's the reality is we're having a pullback. It's been shallow. It's been nice. It's about as bullish of a pullback on a near-term basis you can get. Now, things can change if we were to really break down tomorrow. But until it does, we have to expect that this bounce off this moving average will occur, because that's generally what happens. That's why they're called bull tags. So until we do, we'll expect that. So we'll take a look now at some of the other charts and see what their patterns are telling us in terms of how likely we are to get that bounce off those moving averages. All right, well, that does it for our Market Outlook preview video. You can unlock the rest of this video by joining us at marketscholars.com. All of our subscribers get access to the full Market Outlook video, starting with our foundation tier at just $29 a month. With that, you get access again to the full Market Outlook video, as well as the trade idea we do in every video. We also, you get access to the Market Outlook live video, where at 3:30 Eastern time, we live stream and manage these trades day after day after day. And then finally, you get access to our Market Outlook live trade tracker, where we track the results of all these Market Outlook trades day after day throughout the course of the year. So you can kind of compare and how we're doing relative to the market as a whole, or relative to, again, how much you pay for access to those ideas and to these videos. So again, thank you very much for watching. The link to all of that, the link to the full blog post, which actually you can view for free, but also the full video, all of that's down in the description below, as well as the pinned comment below. So click on that link to get some more information. Thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon down there, comment on the video, share it with anybody else that you think would be interested in it. Follow me on Twitter at DavidSettle42 for more content between the videos. Join us at Market Scholar at Facebook as well. Follow me on LinkedIn. All the social media channels, like our content there. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.